Assalamu alaikum everyone, this is me Savira Jam. Today I am going to present the topic that is Islamic and conventional banking system in Pakistan. First of all, we will understand that what are the banks. Banks are the depository institutions that take the money from the saver or the funds from the saver and give it to the investors. Now moving to the overview of Pakistan's banking system includes that Pakistan has dual banking system. First one is Islamic banking system and the second one is conventional banking system. The dual system allows the customer to choose between the interest-based banking, that is the conventional banking, and the interest-free banking, that is the Islamic banking. Both system plays a crucial role in the economic development of Pakistan. Now moving towards the next slides. That is conventional banking system in Pakistan. So conventional banking system in Pakistan follows the interest-based model that is prevalent worldwide. These banks offers a variety of financial products and services that includes loans, deposit, mortgages, and investment products that are all based on the interest rates. Firstly, we will discuss about the features of the conventional banks. The banking system operate on interest-based model, that is riba, where the concept of charging interest on loans and deposits is fundamental. The second one is risk. The lender assume all the risk in the transaction, particularly the risk associated with non-repayment of default on loans. The third one is profit generation. Profit is generated through charging interest on loans and deposit, where the bank earns income from the difference between the interest on the loans it provides and the interest it receives from the deposits. The third one is the regulations. The banking system is regulated by the State Bank of Pakistan, which oversees the financial sector. International norms and standards also apply to ensure the compliance with global financial regulation and the best practices. Now moves toward the excited products that are provided by the conventional banks. The first one is saving and the current account. Saving account in conventional banks allows individual to deposit their money securely while earning interest on their balance. It provides easy access to funds through ATMs, mobile banking, and withdrawals with low minimum balance requirement. The second one is current account. The current account includes and is used for the day-to-day transaction, and it is interest-free. Fixed deposit. A type of saving account is one in which depositor place a fixed amount of money with a conventional bank for a fixed time. That may be 3 years, 3 months to 5 years in exchange for a fixed interest rate. Now moves towards the next slide that discusses about the loan products. So conventional banks firstly provided the personal loans that are unsecured loans offered to individual for various personal needs such as medical expenses, education, and debt consolidation. The second one is home loan that are also called as mortgages. These loans are provided for purchasing or constructing a home. These loans are secured against the property, offering low interest rate and longer repayment terms compared to unsecured loan. The third one is car loans. Loans given to purchase vehicle with the vehicle itself serving as a collateral. They typically come with a fixed interest rate and repayment period based on the value of the car and the borrower's credit worthiness. Let's see what are the other products provided by the conventional banks. First one is trading financing. Trading financing in conventional banks help businesses manage international transactions by ensuring payment and reducing risk. Key products include letters of credit, which guarantee payment for goods, and the second one is trade credit. Credit cards are also provided by the conventional banks. They allow the borrower to up to a credit limit with interest charged on an unpaid balance. These cards often offer reward and cash advance with fee like annual charges and late payment penalties, making them versatile for everyday use. Investment products are also provided by the conventional banks that includes the treasury bills, bonds, mutual funds, and unit trust. And the last one is insurance products. Conventional banks may also act as an agent for selling the insurance product. They also provide the life insurance, health insurance, car insurance, etc. The second major banking system that is prevailing in Pakistan, that is Islamic banking system. Islamic banking system follows the principles of Sharia, which prohibits earning or paying interest. Means riba is prohibited in Islamic banking system. Instead, it relies on profit and loss sharing agreements and asset-backed financing. Now we will discuss some features of the Islamic banking, which includes the profit and loss sharing, no interest-based transactions, risk sharing, and ethical investing governed by State Bank of Pakistan and also the Sharia Board of Pakistan. Compliance with Sharia principle is mandatory. Next one is product provided by the Islamic banking. The first one is Muraba. Muraba is a sale contract where bank buys an item and sell it to the customer at a fixed profit margin. The second one is Mudarba. Mudarba is a profit-sharing investment contract where one party provides capital and other manages the business. That is also sharing profit. The third one is Musharaka, a joint venture partnership where all the partners contribute capital and share profit and losses based on the investment. The fourth one is Ijara. Ijara is basically an agreement where the banks buys an asset and lease it to the customer for a fixed rental fee. Now move toward the deposit products. So first deposit products is Mudarba saving account, which is a profit sharing saving account where the bank invests funds on the behalf of the customer, sharing profit generated from the investment. Wakala. Wakala accounts where the customer appoints the bank as an agent to invest the funds and generate the returns, and also charging a fee for its services. Now let's look at the examples of conventional and Islamic banks that are currently prevailing in Pakistan. So if we talk about the conventional banking, so it includes firstly the National Bank of Pakistan, Al Habib Bank Limited, United Bank Limited, Standard Chartered Bank, Bank Al Flah, Bank of Punjab, Faisal Bank, Citibank, Standard Chartered Bank, and MCB Bank Limited. These all are the conventional banks that are currently prevailing in Pakistan and providing their product and services to the customers. If we look at the Islamic banking, so the major Islamic banking in Pakistan are Mizan Bank, Al Barka Bank, Bank Islami Pakistan, Faisal Bank, and Dubai Islamic Bank Pakistan. The next slide, which is clearly giving a difference between the Islamic and the conventional banking. So if we look at these points, so the difference lies between the core principle, the profit model, the key products, and the risk sharing and the investment restrictions. The new one is investment restrictions. So if we talk about the Islamic banking, so in Islamic banking, there's a restriction for investing a investment, because Islam also always avoids the investment in the harm and in the haram industries. But if we look at the conventional bank, so there's no restriction in the conventional bank. They just based on the profit, their motive is to earn the profit, and they work for profit maximization. Challenges faced by the banks in Pakistan, which include the cyber security, interest rate fluctuations, liquidity issues, non-performing loans, underdeveloped financial markets. Now look at the impact of Pakistan's economy. Islamic banking role in Pakistan economy. Islamic bank promote the ethical investment by avoiding the activities like alcohol and gambling, fostering the sustainable economic growth. The second one is they encourage the risk sharing through profit sharing models, leading to the more equitable wealth distribution. And the third one is asset-backed financing and the prohibition of the interest make the Islamic banking more resilient to financial crisis. Conventional banking is also playing very important role in the economic growth of Pakistan. They are providing the lending services and the infrastructure development, loans for the infrastructure development, interest-based lending for businesses expansion, infrastructure products, and overall economic development is also boosted by the conventional bank. Let's put all this into a nutshell. Both Islamic and conventional banking plays a vital role in the Pakistan's economy. Conventional bankings have contributed to the industry development, infrastructure, and economic stability, while the Islamic banking have fostered financial inclusion, ethical investment, and risk-sharing solutions. The future of banking in Pakistan seems to lean toward a blend of both systems, as each offers unique benefit to meet a diverse need of the Pakistan's population. Thank you so very much for listening me.